Hello guys, what's up? So, in today's class, we are going to discuss some of really tricky questions in CA Interlaw. So, I've tried to take your last 2-3 attempts question paper, MTPs, RTPs, and I've tried to list down all tricky and unique questions that have able to find in many chapters. So I've just tried to sort it down amongst the chapters only so that we can have a quick revision. All that you need to do is sit back and relax. Just pause the question. You guys also try to give your own provision. Always remember, in your exams, what gives you mark is always the provision. It's never anything else. So just pause a question, try to say what is the provision for this, write it down, and try to sum up that provision in 2 or 3 words. That's the main key words you guys have to be looking out for. So just try to do this exercise with me so that you guys will be able to be more accurate in your writing skills. Clear? Okay, let's start your CA Inter Law. So I have around, I think 50 odd questions, 51 questions. Let us discuss all of that. Yes, done. So here is the first question from the chapter 1. Narendra Motors Limited is a government company. The Shaw Auto Private Limited have share capital of 10 crores in the form of 10 lakh shares of rupees 100 each. Narendra Motors Limited, just a second, yeah. Narendra Motors Limited is holding 5,05,000 shares in Shaw Auto Private Limited. Shaw Auto Private Limited claimed the status of government company. Advise as a legal advisor whether Shaw Auto Private Limited is a government company under the provision of Companies Act 2013 or not. Remember people, 2 things you need to be aware of here is, I'm not just beating around the bush. Let us go to the answer as quickly as possible. What is that? First thing, to become a subsidiary company, you need to hold more than 1/2 of the total paid up capital. So that can be 50.1 to become a subsidiary company. To become a government company, you need to hold at least 51%. Who? Government, central government, state government, and central and state together. So in our case, what has happened? The Narendra Motor Limited, this is a government company. Shaw Auto Private Limited have share capital of, they have 10 lakh shares. The Narendra Motor Limited, what have they done? They are having, out of 10 lakh shares, they are holding 5,05,000 shares. That is like total they have 10 lakh. They are having more than 1/2. Exactly 5 lakh is 1/2. More than 1/2, right? They have 5,05,000. So hence, yes, the Shaw Auto Private Limited is a subsidiary of Narendra Motors Limited, and Narendra Motors Limited is a government company. Government company ka subsidiary company will be a deemed government company. So yes, Shaw Auto Private Limited is a deemed government company. That's what my answer is going to look like. See, they have defined government company also, they have defined subsidiary company also, and then they have written the relationship. I hope this is clear. Okay. Next one. XYZ is a company incorporated under Companies Act 2013. The paid up share capital of the company is held by, so they have said, again I'll take the previous example only. So when will a company become a government company? In this case, what they have said, there is a company called as XYZ Exemptions. In that, Government of India is holding 20%. LIC is holding 8%. And Government of Tamil Nadu is holding 10%. Government of Rajasthan is holding 10%. And ABC Limited, which is owned by government company, is holding 15%. Remember people, the government company definition just says at least 51% of the paid up share capital should be held by central government, state government, state governments, central and state put together. In this case, 20 plus 10 plus 10, technically it's 40. Nowhere the definition says you can add any percentage which is held by a government company, 10, 5, that and all you cannot add. Unless and until it is a direct subsidiary of a government company, you are not supposed to take it for calculation at all. So in the given case, the total is coming to 40 and hence XYZ Limited is not a government company. Fair enough? Good. Okay. Kamal, a chartered accountant, started his e-commerce business by incorporating a OPC on 1st October 2023. He, being sole member of OPC, named his brother Sudhakar with his consent as his nominee in the MOA. Now Kamal intends to replace Sudhakar and to nominate any of the following shortlisted friends as his nominee with effect from 1st January 2024. So he wants to appoint the nominee from 1st January 2024. Okay. There is first person, a Robert, Indian citizen and a resident in India, shifted his residence to USA on 31st May 2022. He has gone to USA on 31st May 2022 and has not returned to India till today. So he has not come back at all. Can we appoint him as a nominee? That's the first scenario. This is a very tricky question. Dinakar, an Indian citizen and a non-resident in India, came for employment in India on 1st April 2023. He has come to India on 1st April 2023 and have continuously staying in India since then. Referring to the provisions, they're asking you whom can we appoint as a nominee. First thing, people, we know who can we appoint as a nominee. First thing, you should be a Indian citizen. That condition you need to satisfy. Next one, you have to be a natural person. That is also being satisfied here. The third condition is that people, you can be a resident or otherwise. That's the definition. You can be a resident or otherwise. Remember, listen carefully. This is very important. Now, for me to be called as a resident, what is the condition? I should have stayed in India for at least 120 days in the previous financial year. That's when I'll be called as a resident. Hello? Okay. Now, technically, in the previous financial year, when do I want to appoint a person as my nominee? On 1st Jan 2024. So technically, which financial year is running? 23-24 is running. So what is the previous financial year? Previous financial year is 22-23. That means what? Our nominees should have stayed in India during this year. Only then they will be eligible, and only then I can call them as a resident. Agreed? Now come here. You look at this person called Robert. He shifted his residence on 31st May 2022. So he has gone on 2022 and he has never come back to India till 1st Jan 2024. That means what? He has not satisfied our resident condition at all. So can I appoint Robert as a nominee? Answer is no. Robert we cannot appoint. Sir, whereas come to Dinakar. Dinakar, what has happened? He has come to India for employment on 1st April 2023. He has come to India itself in 1st April 2023. That means what? He has come in the current year. So in the previous year, he has not been in India at all. So people remember, the first answer is people. I can write both of them as they are not staying in India for 120 days in the preceding financial year. They are not satisfying the condition called resident, and hence I cannot appoint them as my nominee. That's my simple and easiest answer. Is this clear? Now, I know, yes, wait, I know you guys are thinking, sir, but the definition has something called as resident in India or otherwise. No, sir. So even if they are not residents, we can technically appoint them. That's what is your condition. Remember people, this word resident or otherwise, this was introduced to help non-residents. Imagine there are our friends, cousins who are, working in USA or some other country. They'll go there for 3 years, 4 years. After that, probably they will come back. But technically, for a short term, they have gone abroad. Now, when they are abroad, can we appoint them as nominee? Under previous scenario, we could not appoint them because you should have been mandatorily resident, which was actually seen as a country. It was a disadvantage because people were leaving India and going because laws are not favoring them. So what did we decided to do? Okay, let us imagine if you are a non-resident, that means what? You're going out of India for employment or something for 3 years, 4 years, 5 years, as the case may be. You will come back. In such case, you can fit in the condition called as or otherwise. So there is a difference. Imagine now I am a person, in the previous year I just to go on trips. I have not satisfied 120 days condition at all. See, technically I have not gone for employment. I have just gone for trips. Now technically I am debarred. I am not allowed. I am disallowed to become a member or nominee because I am normally a resident only. I have not gone abroad for taking up employment or anything. So I will be called by my country as a resident itself. But when I go abroad for taking up employment, business or any such cases, I will be given a tag called as non-resident. You guys also popularly call them as NRIs, no? If you become an NRI, if you are termed as an NRI, then you will be coming under this definition called as or otherwise. Now sir, we have a question. How do we know whether this Robert and this Dinakar, in that how will we know who is a NRI, who is not a NRI? That's why I have given you clearly, people. They have given the word a person. The first person is a resident in India. So technically he is not given up his employment or anything. He is there in India only. Yeah, he might have gone for any purpose, but he will come back very early. He is a person like me and you. And there is one more person called as Dinakar. Now the question clearly says he is a non-resident in India. That means I am coming under the exception called as or otherwise. So my second answer can be, remember this is also valid. I cannot appoint Robert, but I can appoint Dinakar. Because Dinakar comes under the definition of or otherwise. See, even the institute has also given both the answer. One is Dinakar can be appointed. Next one is Dinakar cannot be appointed. They have taken both. I hope this is clear, but Robert is clear. Robert answer is clear, see. Because he is a resident, he has to satisfy the 120 days criteria. I hope this is clear. Yes, good. Next one, ST Private Limited is a wholly owned subsidiary of SST Limited. Okay, there is ST Private Limited, which is a wholly owned subsidiary of SST Limited. SST Limited. It has only 5 members and restricts the right to transfer their shares to any person other than a person who is in employment of the company. Some members oppose the decision of the company as they want to invite a group of people to subscribe shares in Suti Textile Private Limited. Decide with reference to provision of Companies Act whether restriction of company to transfer the share is correct. People, I hope you guys got the question. This is a private company. This is a public company. In public company, there is no restriction on transferability of shares. There is no restriction on the total number of members. Whereas if you are a private company, the maximum members you can have in your company is 200. And you restrict the transferability of shares. You cannot sell your shares to a random outsider. Sir, so what? ST Private Limited is a private company. So having the restriction is valid only. But remember, they are a subsidiary company of a public company. So subsidiary of a public company will be called as a deemed public company. Hello? I hope you are getting the point. That means what? Now the question is, should the restrictions exist or not exist? Remember people, again here your your institute has given again both the answers. One, that ST Private Limited will be treated as a deemed public company and hence they need not have any restriction on transferability of share. That's one perception. That's one view that they have given. The second view that they have given is, yes, it's end of the day a private company and hence the restrictions on transferability of share is still valid because it's a private company. The institute has given both the answers. Sir, so which one is right? Both are right because they have given both. But sir, there will be something called one is right, no sir. Which is right? Remember people, the private company, even though you are a deemed public company, for the operational aspects people, that is with regards to the number of shareholders, not going for public offer, IPO, restriction on transferability of share, these 3 conditions, you will be treated as a private company only. Any other exemptions, you will be treated as a public company. But for the restrictions, you are treated as a private company only. That's the answer. In reality, But yes, institute wants to be easy on you. So what have they done? They have given you both the answer as valid. But according to me, the restriction is valid. That should be the only answer. But yes. Next one. H Limited is an unlisted public company having 5 directors in its board, which includes 2 independent directors. Sankul Private Limited is subsidiary company of Hastaprat Limited, actively carrying on its business, having a paid up capital of 1.5 crore with 40 members and turnover of 18 crore respectively. And the said company is not a startup. In the context of aforesaid case scenario, please answer the following. Whether Sankul Private Limited is mandatorily required to prepare cash flow statement for the financial year as part of its financial statements. So people, first of all, what is financial statements? I need to prepare your balance sheet, P&L, statement of changes in equity, your cash flow statement. Now I need to prepare all of this. Agreed? Yes. But whereas if you are a dormant company, if you are a OPC, if you are a small company, if you are a private company who is a startup, you need not have to prepare cash flow statement. Agreed? Now that is what they are asking you. Whether are they required to prepare the cash flow statement? Provide your answer by analyzing if Sankul Private Limited into following categories of companies. 1. What if it's a OPC? Is Sankul Private Limited is an OPC? Yeah. Answer is no. Why? You only tell me. They're telling you because it's a subsidiary of people, Hastaprat Limited, it cannot be a OPCA. It is always people, definitely, it's a private company. It is not a one-person company. So, a company cannot be considered as a one-person company because who is the shareholder? It's an artificial person. So, Sankul cannot be a OPCA. Next one, can it be a small company? As it is a subsidiary company of Hastaprat. Remember, a subsidiary company can never be a small company. So yes, I cannot be a small company in the given case. Third one, sir, dormant company. Can I be called as a dormant company? They've clearly given in the question, people, that this company is actively carrying on its business. Because it is actively carrying on its business, I cannot be considered as a dormant company. Because dormant is what? Inactive, right? Okay. The fourth one, a private company respectively. A private company is not exempted, people. A private company which is a startup is exempted. And in the given question, they have clearly given that it is not a startup. It is not a startup. And hence, people, they are not exempted from filing cash flow statement. They have to file cash flow statement in all the scenarios. Yeah, I know. Yes, people, I know you guys are asking for this. I'll be uploading with the video. You can find it in the description. I'll be giving you a link to download. Please feel free to download. I'll give it to you. Yeah. Okay. Next chapters are incorporation of company and matters incidental thereto. A group of 5 professionals decided to start a private company in the anti-drone solution sector under the name Drone Private Limited. In 25, the company wants to have its registered office in Mumbai. On April 2nd, it applied for name reservation through RUN and received approval on April 6th, 2025. On May 15th, 2025, due to a delay in documentation, the SPICE form for incorporation was filed after 39 days of name reservation. The company proposed 2 directors, one Indian resident, one foreign national residing in the US. The foreign director did not have a DIN and his passport was notarized but not apostilled. The company's registered office address was not finalized at the time of filing INC 32. MOA and AOA were signed electronically, but one subscriber used a digital signature of a third party with verbal consent. Based on the above facts and applicable provisions, answer the following questions. What is that? Was a name still valid when INC 32 was filed on May 15th? Now remember, people, the name will be reserved for maximum of 20 days. You have to complete your incorporation process within 20 days. In the given case, they have clearly said that people, they have filed the incorporation after 39 days. So on that ground, people, the incorporation, there is a delay and hence it is not valid. Is it mandatory to provide the company's registered office address at the time of incorporation? No, people. Section 12 clearly says that a company should have a registered office address mandatorily within 30 days of incorporation. So at the time of incorporation itself, you need not have to have a mandatory registered office. You can just have a correspondence address. Temporary is okay. But the permanent, you need not have it immediately. You will be given 30 days time. So here I'll still have 30 days time. What are the consequences if a company fails to file declaration for commencement of business within the prescribed time and fails to carry on any business or operation? What is this, people? Certificate of commencement of business. I need to file it within 180 days of incorporation. That I got all the subscription money from the shareholders and we have communicated the registered office address to the registrar. I have to file a declaration. Who? The director will file, which will also be certified by a professional. So if you don't do it, people, remember it is one of the reason for striking off your company if certificate of commencement of business is not filed. That's my answer. Simple. People, see how lengthy the questions will be, huh? Yeah. Okay, next one. Articles of Association of AB Limited provides that the documents may be served upon the company only through speed post. Suresh dispatches some documents to the company by courier under certificate of posting. The company did not accept it on the ground that it is in the violation of AOA. As a result, Suresh suffered from loss. Explain with reference to the provision of Companies Act whether refusal of documents by company, is it valid? Whether Suresh can claim damages for it. So the question is given from section 20, which is very simple. Whenever you need to communicate with the company, what are the different ways that you can send any document to the company? In section 20, it is clearly given. You can send it by registered post, speed post, courier, you only directly giving it to the registered office, or in any other electronic mode. As the person has clearly used the courier service, which is as per the law, the company rejecting your courier, people, is invalid. Now second part, whether Suresh can claim any damages, people, the section is silent on it. Now in the exam, people, they will test such parts like this, in which if you ask me is challenging, because you will not know whether is there any penalty prescribed, not prescribed. See, in the given case, the penalty is not prescribed at all. Yeah, but so what will you write here? If Suresh has suffered any damages, yes, he can claim damages. But remember, that's just an interpretation, that's not law, because law is silent on it. Yeah. So yes, Suresh can claim damages, but the law, remember, on this aspect is silent on it. Okay. Next one, sir. I hope you guys are understanding. Yeah, I have questions for all the chapters. We'll be seeing it. Clear? But you pause it and you watch it. Don't just keep on watching it. And see, whenever I'm telling you the answer, I'm trying to tell you the provision, the main word you guys have to write. I need not have to see everything else. If that is there, that is more than sufficient. Clear? Okay. Amrish, after completing his postgraduate degree in mechanical engineering from UK, returned back to India. Although he got a good placement in UK based company, but he thought to build his own empire. Amrish belongs to Bamar district, Rajasthan. He planned to manufacture customized dress for tourists. For this purpose, he planned to incorporate a private limited company having the following person as the subscribers to MOA and AOA. Okay. First one, Amrish himself. Next one is Robert. He's a college friend of Amrish, citizen of UK. Has technical expertise and in order to incorporate, okay. And he is on a valid business visa. Okay. Eliza, she is a college friend of Amrish. She is a citizen of Netherlands and has good business contacts in European countries, which will immensely useful in marketing of the company's products. She is also citizen of Netherlands, foreign citizen. Goma Devi, the mother of Amrish, who is illiterate. She has sold, okay, 1 point, which agreed to subscribe 5 crore. Okay. Good Work Technologies and LLP. Okay. Mohit Electronics, a company. Now, Amrish planned to have registered office of a company at Jaipur. Okay. Now, they're asking you people, they're asking you what is the procedure when these people are signing your MOA and AOA. What is the procedure involved? People, this is coming under incorporation of a company. Remember, people, when someone is signing their name to MOA and AOA as subscribers, now we need to be careful on who they are. If you are a normal Indian citizen, then what and all you have to give your details in MOA, OA. You will give your name, you will give your address, you will give your occupation, meaning what do you do. So you will give all the details. So Amrish people in this case has to give all the details of him, his address, where does he stay, and the occupation of that person. He needs to write everything and he needs to sign it. And how many shares he wants to subscribe. That details also he will sign. Amrish. Yeah. Now, sir, who is the next person? The next person is Robert. He's a college friend. Technically, he's a foreign citizen. But remember, he has visited India on a valid business visa. Now, remember, people, if you're a foreign citizen, now when you have come to India, you can directly come to India. You can sign all the documents provided. You should have come on business visa, not on any tourist visa. So if you have come to India on a business visa, people, you are free to sign any document and no other further documentation is required. So in the given case, as Robert, who is a foreign citizen, has come to India, who is holding a valid business visa, he can directly sign his details along with all the name and the number of shares he wants to subscribe. That is more than sufficient. Third one, Eliza, she is a college friend of Amrish. She is a citizen of Netherlands. Now she stays abroad. She has not come to India. Now remember, the law says, people, you need to sign all the documents. In addition to signing all the documents, now what is a guarantee that you only signed? What if it's a fraud or fake or forgery? To avoid that, what do we do, people? We say you have to go to a notary public, meaning a government officer of your country, and you need to get a signature from them that whatever is a signature that is signed on MOA of Eliza, that signature was done in their presence, like a witness. It should be signed by a notary public. Is this clear, all of you? And remember, if you are coming from a country who is not party to a Hague Convention, or if you're not party to this Hague Convention, basically Commonwealth Hague Convention, then in such case, remember, you need to get your document further certified by a consular office or a diplomatic. That is nothing but, people, imagine you can go to the Indian embassy there, you can get the document further signed. So technically what happens, if you're coming from Netherlands, technically they are not party to the Hague Convention. You need to get your document signed by a notary public, plus it should also be signed by a foreign diplomatic or a consular office. Technically, you can imagine it should also be signed by an Indian embassy there. Clear? Okay. Next one, sir. Goma Devi, who is a illiterate, someone else has to sign their name on behalf of her. It is okay if he just puts a thumb impression. That is more than sufficient. But someone has to write that she is an illiterate. So someone else has to write her name, and whoever is writing the name of Goma Devi, they should also sign the document like a witness. Okay, next one. Good Work Technologies LLP, people. In such case, what will happen? You can authorize any of the partner. Correct? Now imagine if we have 5 partners. We'll authorize one partner to go and sign on behalf of LLP. But one thing for you to remember, all the partners have to agree on who should go and represent the LLP. He will go and sign the MOA, OA. Clear? And the next one, sir. The Mohit Electronics, because it's a body corporate, people, that is technically it's nothing but it's a company, that in the case of company, it shall be signed by a director, officer, or any employee of the body corporate duly authorized by a board resolution. So your director, officers, or employee, if at all you are authorized by the board of directors, so we pass a board resolution. I nominate Mr. A to go and sign on behalf of the company. A will go and sign on behalf of the company. It will bind the company. That's the answer. Clear? Yes? Okay. Next one. Mr. Shamlal is a BTech in computer science. He has promoted an IT startup and got it registered as a private company. Initially, only he and his family members are holding all the shares. While drafting AOA, it has been included that Mr. Shamlal will remain as a director of the company for lifetime. He wants to be a director for the lifetime. Mr. Mehra, a close friend of Mr. Shamlal, has warned him that in future, if 75% or more shares in company are held by non-family members, then by passing a special resolution, the relevant articles can be amended. In such case, can be amended and Mr. Shamlal may be removed from the post of director. Mr. Shamlal has approached you to advise him for protecting his position as a director for lifetime. Give your answer as per the provision of Companies Act. Okay. In the given case, what is that they're asking you people? Remember, he's thinking that forever he needs to be a director. One of his friend is telling, see, if you add that point also today, tomorrow, if someone else become the majority shareholders, if they pass a special resolution, then they can alter the articles. Now, people, what is the answer? You can introduce something called as entrenchment. That is, I can make this 75%, 80, 90, 95% to change articles. So I can make articles that I will be the director forever, and I can say to change this, to change the articles of association. You cannot do it with simple majority of 75%. You would need 90%. If I do that, it becomes entrenchment. It will not be easy for me to change the directors. I can introduce that provision. Simple? Yes? Okay. Okay, next one. Entrenchment it was. Okay, next one. UINA, the Infra Projects Private Limited, was incorporated on 1st June 2022. Mr. X had already registered the trade name of UINA Infra Projects on 1st April 2018 under the Trademarks Act 1999. Mr. X was suffering from a prolonged disease since 1st April 2021. When Mr. X recovered from illness on 20th May 2024 and joined his office on 5th July 2024, he came to know from his staff members that a company has been incorporated with the name UINA Infra Projects Private Limited, which is same. He lodged a complaint with the regional director on 10th July 2024, requesting him to order the company to change its name. The regional director examined the application of Mr. X and on 11th July 2024 issued a direction to UINA Infra Projects Private Limited to change its name. Mr. D, a director of UINA, contended that the above direction of the regional director was bad in law and therefore not proper on the following grounds: that the name of the company is not too identical with or too nearly resembles to the name of the company. This is wrong. It is similar, no? UINA Infra Projects, UINA Infra Projects. It is too similar. So it is resembling. So that contention is wrong. That the stipulated time period of 2 years of making any complaint with respect to the name in the above ground was already over. Within how many days you need to make a complaint, people? It's not 2 years, it is 3 years. So my complaint will still be considered as valid. A simple question, but remember, clear? Also advise UINA Infra the time period within which the company will be required to change its name in case the direction of regional director was valid. You need to change the name people within 3 months of the order of the regional director. Correct? Simple? Okay. Section 16 is what they have asked. Okay, easiest. I hope it is going good. Hello, all of you. Okay, next one, share capital and debentures. Comment on the following. Disclosures required to be made on the face of the prospectus. Condition in regard to the expert statement. Date of publication of prospectus. A direct question basically. You need to make a disclosure as to what? Whatever is this is section 26 is what they're asking you. See the comment based question. Yeah. Okay. So disclosures required to be made that we have filed all the prospectus before we issue to the public. We have first given to ROC. You have to give that declaration. Second one, whatever are the contents we have mentioned in the prospectus. Say for example, valuation, expert statement, all that additional documents are also submitted to ROC. This has to be mentioned in the prospectus. That is what is the answer. Conditions in regard to expert statement. What is expert statement? The expert should not be involved in the management or conduct of the business of the company. Second one, he should have given his consent. Third one, if he has given, he should have not withdrawn the consent. If all three conditions satisfied, I can give the expert statement. What is the date of publication of prospectus? The date mentioned of the prospectus will be considered as date of publication of prospectus. All three coming from section 26 only. Clear? Done. Easy? I hope it's easy. Okay. Amrit Praksh Limited was incorporated in 96. Office in Dehradun. See, the every question will be like one, like Durandar script only. Yeah, very lengthy. For expanding the business in manufacturing mobile equipment to mobile accessories, also it required capital, and for this the company issued 10 lakh equity shares of 10 each at par to the public by issuing a prospectus. The prospectus disclosed a minimum subscription amount of 50 lakh required to be received on application of shares, and share application money shall be payable at rupees 5 per share. According to Companies Act, what is the minimum share application money? That is 5%. So here you are taking 50% only, which is fair. It's good. The prospectus further reveals that Amrit Praksh Limited has applied for listing of shares in recognized stock exchanges, of which application has been rejected. The issue was fully subscribed and Amrit Praksh Limited received an amount of 50 lakh on share application. Amrit then proceeded for allotment of shares. Examine the disclosure in the above case study which are in deciding factors in an allotment of shares and the consequence or for violation, if any, under the provision of Companies Act. Simple people, what has happened here? If at all you have filed an application for any stock exchange and if that application is rejected, people, then how can you go for a listing? So in the given case, the company has made an allotment even before the company is successfully listed. So one of the stock exchange has rejected its application. So people, a company cannot go for IPO. Any money received has to be refunded. The company cannot do an IPO in the given case. Hello, that's my answer. Simple. Fine, yes, they have given you fine. I'm just leaving the fine part for you. Aha, see the question, da. Macha, how will you manage these lengthy questions in exam, da? That's why remember people, the key for you to nail the attempt is you guys have to solve as many questions as possible. You should not leave any RTPs, MTPs, model papers, previous year papers. It is your duty to cover everything. Clear? Okay, next one. Shrida Bookmarks Limited, a public limited company engaged in publication of books related to labor industry laws, is planning to raise 10 crore from public. Okay. To fund its upcoming projects. Shrida has assigned two different merchant bankers, namely ZFG and Bull Investments, to act as intermediaries for 60% of the above funds, and the rest to be directly issued to Mr. Kuber, an investment banker who intends to offer the shares for offer for sale to public through inviting bids above the floor price at the stock exchange platform. ZFG is a partnership and were allotted equity shares worth 4 crore on 1st April 2024 to be sold by them to retail investors. Bull Investments, a company by Incorporation, were allotted equity shares of 2 crore for the above purpose as well as on the same date. The offer documents were issued by ZFG and Bull Investment Limited on 10th October 2024 and 25th September 2024 respectively. The offer document in case of Bull was signed by only one director of such a company. There's a B. Okay. Paid. Okay. Both the intermediaries have paid off the full consideration to Shrida Bookmarks Limited till the date of the offer to the public. Mr. Kuber, to whom 40% of the balance shares were issued, further offered to public shares through an offer document. The board of directors of Shrida have opposed such offer document, claiming that the same does not contain the name of the person or persons or entity bearing the cost of making such offer for sale. In view of the above provisions, they are asking whether the OFS made by intermediaries, namely ZFG and Associates and Bull Investments, is valid as per the law. People, for it to be valid, what are the conditions that you need to satisfy? First thing, people, when one company, what is this, people? It's nothing but your deemed public offer. When one company is giving you the shares of that company, they are going to further sell it to the public. Whatever is a document used by this company, why? It will be considered as prospectus only. Now, in the given case, who are our intermediaries? There were two. One is ZFG and one is Bull. ZFG is a partnership firm. If it's a partnership firm, if they are using any document to raise money from public, that document shall be signed by at least half of the partners. Only then the prospectus will be valid. Second one, if it is raised by a company, then remember it should be signed at least by 2 directors. In the given case, only 1 director has signed. That is point number 1. Second point, sir, remember, for the OFS to be valid, people, then it has to be mandatorily what? Before I give it to further to public. That is, if before I further give it to public, all the consideration. Now imagine if the value of the total consideration, that is the number of shares given by X to Y, the total value of the shares is coming to, let us imagine, is 200 crore. Y limited or the Y intermediary should have paid the whole consideration, which they have clearly given the full consideration was paid, and hence we don't have a problem. Okay, the point number 3. Remember, if I give you the shares today, you have to further give it to the public within 6 months. In the given case, when did we give it to you? On 1st April 2024. What are 6 months? April, May, June, July, August, September. Sir, in this case, what is happening? ZFG has issued further to the public on October, which is beyond the 6 months period. So you have not satisfied the requirement, hence this is invalid. They have done it within September, but only 1 director has signed the prospectus, hence this is also invalid. Hence both are invalid. Is this clear, all of you? I hope you guys are getting which provision I'm talking about. Yeah, deemed prospectus as well as OFS, they have combined it. Clear? Okay. Okay, throat only will pain. 1 lakh equity shares of 100 each were issued at a premium of 2 per share by PQR Limited after offer for the same was received from the shareholders in terms of prospectus issued by the company on 1st April 2022. The prospectus specified that the amount received from the issue will be exclusively used for manufacturing and distributing some life-saving drugs. In August 24, the company, after proper market survey, found that there is ample demand for artificial intelligence. They also wanted to divert a small amount for investment in the equity shares of a large successful company. Since there was surplus money from the above issue of equity shares, the board of directors passed two resolutions for the above purpose. The first for investing 60 lakh for development of AI. The second was 5 lakh, which is a listed company X. They wanted to invest the shares in that money. In order to avoid any unwarranted situation from the shareholders, the directors called for an extraordinary general meeting in which the votes cast in favor of the proposal was in excess of the votes cast against it. Some shareholders objected to the above action of the board on the following grounds: that the resolution passed was not proper, that the prescribed details of the notice which was given to the shareholders should have also been published in the newspaper. Third one, that the resolution passed for investing 5 lakh in equity shares in X Limited is illegal. People, what is the question, people? The question is from section 27, variation of object clause. If at all you have any variation of the purpose of the object clause for which you have raised the money by giving prospectus, you can change it, people, only after following certain condition. What is that condition? You have to call all the shareholders for a meeting. You have to pass a special resolution. In the given case, what has happened? Only they have passed the ordinary resolution. Votes cast against, see, in which votes cast in favor of the proposal was in excess. How much excess we don't know, but we need to get a special resolution for us to do it. So first thing, you need to get a special resolution. That's the point number one. So here, yes, their contention is valid. Point number two, yes, people, the entire thing has to be given in the newspaper, one in English, one in vernacular language. So the second contention is also valid. The third contention, that the resolution passed for investing. Remember, people, you cannot utilize that money to invest money. Whatever is that extra money you have, you can never invest that money without asking, without your object clause allowing you. You cannot invest it in, people, any listed company ka equity share. In the given case, the company wants to invest it in a company which is X Limited, which is a listed company's equity share. Technically, remember, we do not have a right to do so. Is this clear, all of you? Yes. So on these grounds, people, the contention of the shareholders were right. And remember one more thing, they're also asking you that some shareholders objected it. Do I have any right? It is not asked here. What is the right? They will have an opportunity to exit. Dissenting shareholders will be given an exit opportunity. Take their shares, take them back, send them out. If they are not okay with it, they have a right. So all this should be there in my answer. Clear? That's my provision. And write conclusion. Conclusion number one. See something like this. First write of all the provision. Yeah, and write conclusion. In terms of the above provision was not proper as it was not passed by the requisite majority. You need special resolution like this. 2, 3, 4. See, first write of the entire provision, whatever we discussed, and write conclusion one by one. This is also right. Or write conclusion one, the relevant provision and conclusion. Relevant provision and conclusion. That is also right. Because the entire part belongs to the same section, you need not have to write again, two different parts. This is also sufficient. You can write the entire provision once and then you can write conclusion because the section is same. Okay. Okay, next one. Share capital and debentures. Okay, we'll do this and I'll upload this as a part 1. Now you will guys let me know if you want more of it. I'll try to bring you part 2. Yes, and one more thing, people. I'll also take a paper of a student who has answered it in the previous attempt. The student has got around 73, 74 marks. So let us try and see what the student has done and why the student was able to get that marks. Yeah. and let me know if you guys want such things. Then I'll do it and I'll upload it for you as well. Okay. Next one, Forward Troopers Limited is a public limited company engaged in the manufacturing of wearable protective gear and accessories, including helmets and shields. It is a subsidiary of Security Troopers Limited. So F is a subsidiary of Security Troopers. The financial position of Forward Troopers is as under, they have given. The board of Forward have planned upon the following schemes of financial assistance to facilitate the purchase of its shares by its employees. To create an institution in form of trust, which would be responsible for the purchase of shares of Forward Troopers Limited, with the help of loan of 110 crores by the aforesaid company itself. The trustee therein would purchase the shares worth above mentioned amount on behalf of employees in accordance with the employee share scheme. Next one, to provide loan directly to the employee to the maximum of their 5 months salary to enable them to buy fully paid shares in Security Troopers Limited. Mr. Strong, one of the director, has although approved the first scheme but have opposed the second one, claiming that the employees can be granted loan for purchase of the Forward Troopers Limited but not of its holding company. Considering the provisions under the Companies Act along with the applicable rules and regulation, answer the following. The validity of the decision of the board of directors of Forward Troopers Limited to provide a loan worth 110 crore to the trust to aid the employees to buy its shares. Next one, the validity of the contention of Mr. Strong on grant of loan for purchase of shares of Security Troopers Limited. Now they are asking you whether is it valid or invalid. Remember people, first thing, what is the question? Question is people, section 67. A company, public company, cannot give financial assistance to buy its own shares, but there are some exceptions. So they can form a trust. A company can form a trust. Now what will this trust do? The company will give loan to this trust. The trust will buy the shares of the same company. Imagine if I'm speaking about the company XYZ. They will go and buy the shares from the market of the same company and they'll hold it on behalf of the employees. And what will this trust do? The trust will take care of your ESOP. Whenever it is right time, they will allot the shares to the employees. All that management will be taken care by this particular trust. Are you guys getting the point? Yes. Now sir, in the given case, what is happening? How much is the maximum money we can give it? If it's a listed company, what is the maximum we can give? Because it is a listed company, the maximum we can give people is 5%. It cannot exceed 5%. And that too after passing a special resolution. Sir, 5% of what? 5% of people, my paid up capital plus my free reserves. So add your paid up capital plus free reserves. That is your 11451012. How much does it come to? That comes to 107.85 crore. In the given case, how much you want to give it? What is the maximum? What is the amount that you want to give it? They are planning to give people 110 crore, which is beyond your 5% limit. So that resolution is invalid. The second one, people, the director is contending that, see, employee of the company other than the director and KMP can be given up to his 6 months salary. This is allowed for buying the shares. Imagine if he is an employee, if we are giving him an ESOP, he doesn't have money to buy the shares of the company, then what is the use of giving ESOP? So law allows us to give him, loan. 6 months ka salary, we can give it as loan. It is allowed. Provided people, what is that they are telling you? That loan can be given only to buy the shares of my company and not my holding company shares. I can't give my employees loan to buy the holding company shares, is what the director is contending. Is that contention valid? It is invalid. Remember, a loan can be given by the company to its employees to buy its own shares or even the shares of its holding company. It is valid. So in the given case, it is valid. So the contention of Mr. Director, that is strong, is wrong in both the cases. Clear, all of you? Yes? See, look at the answer. Macha, you are supposed to write everything. Okay. Okay, we have another 2 more questions. Okay, last question. Huh? Okay, we'll do this. ArivuPro Limited is a public company that has been performing well. The company's management has decided to buy back some of its shares to improve EPS. Below are the details. The total number of shares are 1 crore. The company's management wants to buy back 10% of its total shares at the market price of 500 rupees per share. The company's articles have authorized the same. They have also passed an ordinary resolution and its board has authorized the buyback of shares. They plan to use free reserves to fund the buyback. Whether the company can buy back 10% of its shares as per the provision of Companies Act. What is the maximum eligible amount allowed to be used by ArivuPro Limited as per section 68 of Companies Act to buy back its share as per the financial data provided. First thing, people, to buy back 10%, yeah, what is the resolution? With board resolution, people, I can very well buy back. The only thing I need to check is, what is my total share? The total share is 1 lakh. How much I am planning to buy back? I'm planning to buy back 10%, that is 10 lakh. At 500 rupees per share. 10 lakh into 500. Now what is the amount? All that you need to check is, do you have so much of money with you? That's the only thing you need to check. Yes or no? Now see, sir, the total money we have is free reserves. We have 100 crore. Correct? You just check whether you have so much of money with you. Yeah, I don't know. You guys have to do this math. We'll see if they have calculated. So it is coming to what? 10% of 50 plus 100 crore is coming to what? 15 crore. Yeah. See, what is the maximum buyback I can do? I want to buy back 10% of the shares. What is the maximum buyback I can do with board resolution? 10% of its paid up equity share capital plus free reserves. So I can buy back 10% of this. That is 15 crore. That is what I can buy back. So in the case they want to just buy back 10% of this, of course, very much possible. It is allowed. Agreed? Yes. Okay. Next ones are, they're asking what is the maximum eligible amount that I can buy back. Remember, people, the maximum amount I can utilize is how much? I have to pass special resolution. If I pass special resolution, the maximum amount I can utilize is 25% of the paid up capital plus free reserves. That is the same. These two only. That is 150 crore into 25%. How much will that come to? You have to show calculation. It comes to 37.5 crore. That is the total money I can utilize. So that is the money. But how many shares I can buy back? Imagine if you are proposing to buy back equity shares. Then people, the maximum I can buy back is, people, what is my total paid up capital? See, they have given it as paid up share capital. I don't know whether it is equity or preference. Let us assume the entire 50 crore is equity only. So, sir, in 50 crore, I can buy back, maximum is, people, how much? 25% of paid up equity capital I can buy back. How much ever this comes to, I think 12.5 crore. This is the maximum equity shares I can buy back. The maximum amount is, people, 37.5 crore. I hope you guys got the difference. What is the maximum a company can buy back? If you pass a board resolution, then it will be 10% of your paid up equity share capital plus free reserves. If I pass a special resolution, I can buy back paid up share capital plus free reserves, 25%. If I am buying back equity shares, then it will be paid up equity shares into 25%. This is after passing a special resolution. I hope it is clear. Yes, people. So you let me know if you guys want more questions. I'll be free. I'll be happy to solve this, and I'll be more than happy to upload this to you guys for free of cost. You let me know. If yes, I'll definitely make a second video on it. Yes, people. Thank you so much. See you all. Bye bye.